On today's panel, we're talking about refinancing your mortgage. The federal government recently made it a lot easier to do so by removing exit fees. Joining me on the panel today from the REIV, Robert Larocca, from Empower Wealth, Ben Kingsley, and from the National Australia Bank, Steve Woodall. Welcome, gentlemen. Now, Ben,
yes,
why people? It seems like a good idea sometimes, refinance your mortgage. Why are people doing it?
Look, there's several reasons why people would refinance. They would be things like they want a better deal from their lender, a cheaper interest rate.
That'd be the major one, I
Look,
imagine.
that's predominantly the major one, but you're also seeing people who mightn't be happy with their financial institution, so they're looking to move on. Debt consolidation, and then the last one, people release equity out of their homes for investment or private use purposes.
And how much of an impact has the government's move to outlaw exit fees?
Look, it's early days yet. The exit fees are effective from the 1st of July this year, so any new loans that are being written basically have no exit clauses on them. So we aren't seeing people rushing down the door because some of the existing mortgages may still have some break fees associated with those loans.
Steve, what's the reaction from customers regarding that?
It's been, well, certainly from the NAB's perspective, it's been quite positive. We've abolished all of our early exit fees for existing contracts and, of course, new contracts.
Is that ad you're doing? Why everyone hates you?
Everyone hates us. We've broken up with the other banks.
Good ad.
But it is. Yeah, it's been very, very effective. It's so from our perspective, we've made things easier for customers, giving customers more choice on what they want to do and what products are going to suit them best. But as you said, there are many other institutions out there that still do have exit fees on their loans.
I presume you're a man who's worked in banking quite a while. They're better educated nowadays, mortgage owners, than when you started?
Customers are very astute. They know what they're looking for. Some customers are still out there just chasing interest rates, but many of the more astute customers are looking deeper into the product and see, is it going to be suitable to me? So looking at the features and benefits of the product, other things that could be linked into the product as well, other credit cards and things like that could be linked in.
Robert, did you ever think you'd see this? Because the exit fees were always seen as, I guess, a bit of a shackle for people to stay with the bank they're with?
It does. I think it's come at a good time, in fact, because there's quite a larger gap now between what the Reserve Bank is charging or saying should be charged as a cash rate, and what most of the banks are charging the standard variable rate. So consumers are paying more for the money than they were paying, 2, 3, 4, 5 years ago. So the fact that the federal government have, I suppose, ding the bell and encourage people to move by discussing the removal of exit rates and actually doing so has really, driven a lot of customers to go and do that. It's a good move.
And it's increased competition among the banks too, which is a good thing.
Yeah.
I did read, though, that some people suggested the banks would make up the fees elsewhere or there'd be more emphasis on other fees. Is that something you think, Ben?
Oh, look, I can't comment what the banks are going to be doing, in terms of recouping those losses, but certainly from a consumer point of view, it's a good news story. But it's also important to note that the numbers still have to stack up. A lot of people think automatically by a cheaper interest rate they're actually going to save money. Really, from that point of view, it may not be the case. They may get ongoing service fees or other types of fees associated with the loan product, which may not, make it, an incentive to actually refinance at all.
And Steve, is there a danger of people bunny hopping from loan to loan, thinking they're queue jumping as you were? You think one queue's moving faster than you?
Not so much. I think once you've got into a new loan arrangement with your chosen bank, I think people do tend to sit there for a while because it is a big thing. It's a difficult thing to do to change your banks, and that whilst many banks have gotten rid of their early exit fees, there still are other costs involved in terms of preparation of mortgage discharge costs and those the legal costs and things that can be involved. So
I think the banks are smart not to lose through the process, and the change in the exit fees will be made up in other locations. But if it's put up front, then it's probably better than backloading it in the contract, so people are not really aware of what the full costs are. So it's making it more transparent's got to make it easier.
What's the first step then, Steve, when someone's thinking of refinancing?
Well, if a customer comes to us to refinance, the first things, of course, we'll do is to go through the customer's current needs and what their goals are into the future, what sort of a loan is going to best suit their intended goal. And then, of course, we work out the appropriate product with the customer, and we'll look after everything for them. So we can arrange the discharge of the existing mortgage that they have, and the customers doesn't really need to do an awful lot in the process.
And what about the future of interest rates? Because obviously speculation that they may start coming down. Yep. Others think they'll just stay on hold.
It's crystal ball gazing to a large extent. The fixed interest rates, as you've noticed recently, have trended downwards a little bit. Sometimes that's an indication that variable rates could follow in the future. It's not necessarily the case. You think back before the GFC, lots of people were locking in their fixed interest rates because there was expectation it might go much higher, 12, 13, 14%, and then the GFC happened and they all plummeted. So, and no one really expected that that would happen. So.
Is refinancing for everyone, Ben? When people
Not for everyone, but certainly from a broker's point of view, I mean, that's the role the broker plays in terms of shopping the market for their clients. If there's an opportunity out there, the role of a licensed broker is to provide opportunities and options for the client for them to make informed decisions. A broker shouldn't be advising a client for their own financial gain and trying to fudge the numbers. So make sure that they're giving you a transparent calculation as to the benefits if it is a financial decision you want to make.
Brokers say at the moment, don't take anything over 7%, and through us you'll get lower than that every time.
And are people coming? Obviously we just asked Steve before. Are you noticing people are better informed, or are they confused by the mass of information that is bombarded on them every day?
There's certainly a lot of information for them to digest. It's not as simple as just the interest rate calculation, but certainly they're more well informed. Research has shown that people do their research before they normally come and talk to a bank manager or to a mortgage broker. So again, have trust in the professional that you're working with. If you think they're transparent and honest and they've put a reasonable case forward with a good explanation, then it's for you to make that informed decision.
Do you find people are understanding things like offset accounts and the difference between, I guess, having equity or having a redraw facility there?
No doubt. 5 years ago you talked about offsets and you saw a blank look in people's eyes. Nowadays they understand that it's offsetting the interest that's being accrued on a daily basis against their mortgage. So I think they're starting to understand that, and they're starting to see and understand more of the features and benefits of doing banking, through either professional packages or collective arrangements with one lender.
Steve, has it been hard breaking up with the other banks? Has it been hard on you?
No, it's been exciting, really.
Has
it has been exciting. Yes, I was walking up the street just the other day, and
one of the looks from the guys from over there.
Well, actually, the local banker at Westpac, I saw them and they're having a sausage chisel, and
what had nothing to do with you?
No, and I couldn't accept the sausage from her. We'd broken up. So.
It's not working. It's not you. It's me.
That's right.
You said that.
That's right.
All right, gentlemen. Thanks for joining us. Good luck getting over the breakup.
Thank you. It's been emotional.